In today's video, we're going to be looking at a GU trade that I took a week ago and my double sweep concept / lower time frame smart money trap. And watch until the end so you can figure all the strategy out. And I also got a surprise for you at the end. So, first of all, I'm going to always be looking at higher time frames, right? We can see that we're mostly bullish, right? Continue the pattern of bullish momentum, right? Sweeping liquidity to the downside to then push up. And in here, we're doing the same thing, right? The same thing we did here, we're doing it right here. Going up, leaving inducements behind, meaning these lows or highs, depending on where the bias is, that don't take liquidity and are just in the middle of nowhere, right? That don't do nothing. So instead of price moving like this, price will move something like this, sweeping liquidity in order to give it fuel to go to the upside, right? And because this was a trap, this level will become a trap. It's right here, right? So because we just had a sweep of this, right now we can expect price to either go here, or because of how weak price is being, we might expect price to go down here, because right now it's forming a bit of a liquidity, it's forming a bit of a support, and it has not, even though the liquidity was quite nice on this week, it has not been pushing forward immediately, or up, should I say. So we can mark out the liquidities. So we had a sweep of this. Right now we might have the all-time highs. We sweep this, and then we went to test this efficiency. So in case price is bearish, it's respecting the structure, and we might continue to the downside after this. We might have the continuation, like we were just discussing about bearish price action, or we might have this structure right here. I think this would be the swing high, swing low, whatever. Don't really care about those. I care about liquidity and seeing structure get taken, right? So yeah, as you can see, price left this order block behind. It already came to test it. It already made the move up. So why is it going down, right? I'm no longer trusting much of this level, even though it can still work. It has already mitigated once. It doesn't need to mitigate it twice, per se. We might have an argument that you might have the order block right here, counting as the candle, and this was an inducement, and then price swept it, came to it, and then reacted from it, which can be valid. And you might have had a risky trade inside of this structure and took advantage of this long. Hopefully not super long until the highs with a 30R risk to reward, right? But you might have gotten a win here, sure. Right now that we got the liquidity drawn, we're gonna play out the price. I forgot to add the XY, but you can see that on my premium group, we can see that at the beginning of the day, this was EU, I was calling for shorts, and EU did the same thing, but it had a better liquidity down below. And I was calling for shorts as the XY had some efficiency above with a gap above as well. Meaning I was looking for the XY to go up. Okay? And that would be good for shorts, because then the XY would go up, but then as it would go down, EU and GU would go up. Or no, no. Because that scenario would be after the efficiency. I was looking for a sweep of this and then actually go up in order to short both of them. So as we start off the day, see that London is quite boring, as usual. It starts to go down. So as it starts to go down, my theory is correct that the XY is probably going up at this point, but no way to position ourselves right here. So price melts, it takes this previous daily low, but it's super close to the liquidity, right? It sweeps the previous day low, but it's super close to the liquidity. So you gotta always zoom out. You gotta always zoom out, because even though it took this liquidity and it's a major one, I'm with you. We also have this, and you don't even have to zoom out that much. It's literally the same month. Okay, it's literally 6 days apart. So remember to zoom out, because even though, yes, we had a liquidity right here, and here we still have this. And if you're a support resistance trader on the higher time frames, you might be looking this as a support. So if you think to yourself that you trade liquidity and you're trading alongside these support resistance traders, which is against your market's logic, then you're completely disrespecting your strategy per se, or your liquidity logic. So then we even do some sort of better liquidity right here. One sweep, two sweeps, and then it looks like we're going forward. But that even made the price do equal lows with that same liquidity that we saw right here, right? So then what this price does? It sweeps it, right? It sweeps it, and we're still doing New York. So right now we finally got the sweep of liquidity. We got the sweep of liquidity that we wanted. We know that because this level was a trap, this one might become a trap, right? And it looks too basic because it's just pretty much a meltdown. People will be placing their orders right there. We swept the major liquidity, like we just discussed. And right now we're in a perfect zone for longs, right? But now this is the point where we differentiate ourselves from the SMC traders. So the support resistance traders, they're already out. They were already counting on this support levels, this right here as well, and the overall reactions. They're already out. Right now it's the turn of the SMC traders. The SMC traders saw this sweep of liquidity, so the smart ones, at least the ones that zoom out, and right now they're looking too long, potentially right here, as this is giving off some reaction from this low, and they're trying to anticipate the retracement, right? We're going to 4 p.m. timing in UTC+1. It's a good timing, and then they got liquidated. They got swept, because now this is the true smart money trap, right? We have the support and resistance traders being taken out right here, and in here we have the SMC traders being taken out. So as soon as everybody has been taken out, that's where I push myself, and you can see as this is the double sweep. You can have two ways of traps that are essentially the same thing, where you have a sweep of liquidity and let's say price. Let's say you have some structure right here. You have the sweep of liquidity, right? And you have the breaker structure that smart money traders will see after the sweep of liquidity. You have a second sweep, and then the correct breaker structure. So this was a fake one to trap people right here. And then you have the good one, where you would position yourself. And the other scenario could be such as this one, where you have a sweep of liquidity, not really much structure to trap people. Perhaps right, as you can see, M1 structure. I can see it just by the candles. As you can see, price stopped a little bit by this, right? But essentially, you can have the same as news. Sometimes you will have candles as wicks, just off the reaction, right? You have the sweep of liquidity. You have some run up, giving off a beautiful reaction. Let's say it gives off a beautiful candle with a wick like this as soon as we sweep it, and then we come to sweep it again without much of a need of structure right here. But you can see that people are already anticipating this retracement as we swap the liquidity and as it's giving off a beautiful reaction, such as this one per se. So you have these two scenarios, which you can call it a smart money trap, a lower time frame smart money trap, or you can call it a double sweep, right? And as you can see, the market is fractal. The market is fractal, meaning the market, the way market will move in the higher time frames will be the same way market will move in the lower time frames. I'm not saying because Obviously, the higher time frames will dictate the lower time frames and the overall direction, right? But the market will move the same way, meaning you can see how the inducement of the sweep of liquidity was right here, right? It was this one. But instead of price sweeping it and instantly go higher from there, it did a second sweep, right? It did a second sweep. First sweep, second sweep of liquidity. And once you zoom in on this, you have one sweep and two sweeps. That's the overall strategy. You want to see a liquidity sweep, meaning a smart money trap on a high time frame, and then you want to be seeing a smart money trap on a lower time frame. But this is not the lower time frame, but you can see it as an example, as it would be the same thing. If I show you right here, you have you have a trap on this level because of the liquidity, and then you have a trap on this level, right? And as soon as we have the XY in our direction, right? Because the XY at this point was already, let's see what it was. GU is in a good zone, right? After the sweep of liquidity. The XY was already taking, as I already filled the gap, it was already taking the previous daily high, and it was touching this efficiency, right? So then I just told my students, buy GU 10.4 pips at this structure right here is what we can do. I can see it by the candles, but I can show you in 1 minute. It will look kind of something like this. I don't recommend you to go to the 1 minute that much, but if you can see it by the candles on M5, that's already valid. And you can see something like this. Maybe you would prefer this structure right here. It's still valid, but for me, it's too much. It's 40 pips. That's a lot. That's a lot of pips for my strategy. I would advise you to stay. If you can get an entry below 10 pips, that's cool. But it can be a bit too advanced and too refined. But 10 to 15, it's already amazing. And then I just went for my fixed 1 to 3 with the stop order. Because I know I'm in a the liquidity, the smart money traps is executed. So right now price can just run, and I'm not risking it not being in the trade just because I'm waiting for price to tag me in on a limit, right? So in here, I'm positioning myself immediately. And as you can see, if you read liquidity enough well, price will just react like this, right? If I were to place myself on the limit, I'll miss this. I'll miss this trend probably, right? And then it swept some liquidity right here, as you can see, right? It was going up, going down, going back up, taking the previous low, and then running back up. And we got ourselves a win. This is just to tell you the overall structure that I was mentioning before of how price really moves, right? Like this. Sweeping liquidity, going in one direction, maybe, but sweeping liquidity. And even on the range, it's just sweeping liquidity, going from one liquidity to another. And then we got to win. We got to win, and perhaps you could even extend it to another highs, right? Because it was still valid. Maybe even get a 5R. But we stick to our 3, and as you can see, we got ourselves a win. 10.4 pips. This was 11, but okay. Might be different brokerage from the trading view to the FX sweep play. But yeah, as you can see, we got it right here. TP smashed. Called out for the students. And all the vision in between that. Because the signals aren't for just for you to survive off, right? It's for you to learn the vision, right? And the bonus of you taking them. But as you stay here, you see me send out daily analysis, see me get on trades, compare it to the live markets actually happening, everything live, right? Because these are sent at the spot. They're not sent right after once the trade is done. Okay, these are sent all in live markets. You can go to the screenshots and you can see the timers on that, and you can can compare the timings. All right. You got the 3 minutes here, and this was taken at 4 p.m. around 4 p.m. UTC plus 1 or Central Europe time, right? And 1 hour before, because I'm staying in Portugal, which is UTC plus 1, if I'm not mistaken. Central European time is UTC plus 2. Portugal time is UTC plus 1. And just because I'm used to UTC plus 2 hours, because I became profitable when I was living in France. That's the whole reason why I use UTC plus 2 hours, right? So yeah, the premium is just for you to get a hang of the strategy. And along with the premium, you get a lot of videos, a lot of exclusive videos, where the majority is just backtesting, over 20 to 30 hours of exclusive content, just explaining you the strategy, just explaining small little things, recordings, trade breakdowns, backtestings, where it's the most important videos you can watch to really get a feel of the strategy. And it's not this like the backtestings that I upload on YouTube, where I'm just going for entertainment and taking a lot of trades. It's backtestings where I detail everything that I'm doing and everything that I'm seeing. So they're really more valuable. And the surprise I would have for you is just that I'm giving you a last chance to grab a seat on the premium for super cheap, right? This price will never be available again. And usually I don't even guarantee access to non-mentorship students. So I'm giving you this chance, and with a guarantee that if you join and we end up the month in negative, then you can get another month for free, right? So we've been smashing it. I hope you come smash it with us, but most importantly, learn to trade by yourself and get a feel of the strategy along with the psychology, and join us on our live trading calls as well. Right? This has been it. I hope you guys enjoyed. I hope you guys found value out of this video. Backtest. Try to find this trade by yourself. And yeah, I'll see you on the next one, boys. Thank you for watching.